We have an investor and a CEO of a company. He'll tell us whether he likes these holidays every time. Every now and then, people are on holiday. Hey, Edwin Dande, CEO of Cytonn Investments, is here with us. Before we welcome him, let's hear the day's proverb. City?
This is our final proverb from the country of Somalia. My father has killed a mouse. Will he fail to kill a man?
Yes. Oh, sorry, it wasn't a question.
Small mammal, big mammal.
My father has killed a mouse. Will he fail to kill a man?
Yes.
I don't get this one.
Dealt with one small...
If you can deal with the small things, you can also deal with the big things.
Yes.
It should be the other way around.
Kama umetatua hizi shida ndogo ndogo.
If my father can kill a man...
No.
Will he fail to kill a mouse?
Will he fail to kill a mouse?
That makes sense. But he's killed a mouse. Will he fail to kill a man?
Yes.
To them, death is death.
You do understand that your comments are inconsequential because
the proverb
was already written. Okay,
it was gazetted.
If you want to rewrite and make your own proverb, please go ahead. Okay. So the proverb stands as it is, but nonetheless, let's hear your opinions. You're saying that if the mouse can die before the man, what happens when?
Why are you angry?
He's feeling attacked.
Proverb written. Hiya.
Edwin Dande, good morning.
Good morning, Eric.
Welcome to Kenya's biggest conversation. Welcome to the hot seat of the Situation Room. That proverb, do you get it? Because clearly, as you can see, Ndu and I are not.
I also don't get it, but I think ametupatia fununu. If you can figure out not necessarily small things but complicated things, then you should be able to, if you can see the trees, then you can see the forest maybe.
Right. Okay. Even you hadn't thought of it that way.
No, I hadn't actually. I hadn't at all. Thank you, sir. I was thinking more of
you can deal with a mouse that can hide.
Teeny little thing.
Yes.
You can see
about this giant thing that you can clearly see. Right. Okay. Edwin, karibu sana. You know, you've been having serious conversations on social media lately. You're talking about the president. So first of all, the president went to the to the Nairobi Securities Exchange last week. He had a conversation and he was talking about, things that the government ought to be doing and what we should be seeing from our capital markets to make them vibrant and to make them work. And then you wrote a piece and you said, for all those things to work, certain things need to happen within our capital markets. So you'll tell us and teach us about the capital markets. But first of all, tell us about Cytonn Investments. Who are you?
Cytonn is first, it's about innovation. I always remind people the word Cytonn has never existed anywhere until we created it. We sat around a table and said, we want a name that does not exist. We played with letters and came out with the word Cytonn. So it's about innovation. Mm-hmm. Now, why do I insist on innovation? On one side, we raise money from individuals, just like you and I. We take that money and majority of it we put into real estate. So instead of going to a bank and raising the money from the bank, then going to put it in real estate, we just come to you and say, why don't you lend us the money? Once you lend us the money, we go put it in real estate. So it's end-to-end investment and real estate firm.
When you say you put it in real estate, what does that mean?
We construct real estate, but not any real estate. All our real estate is in around 4 areas. One is Karen. Now, while we are building residential houses in Karen, people look at it as a real estate play, but Karen has the highest concentration of high-end schools anywhere in Kenya. So in both good and bad times, people who are wealthy, and not just in Kenya, these people come from South Sudan, they come from Rwanda, Tanzania, Uganda. They want to send their kids to these good private schools in Karen. So that's one place where we put money. The second place is Kiambu County. Of the 10 fastest growing towns with a population of 50,000 and above, 6 out of 10 are in Kiambu County. So the play there is demographics. Mm-hmm. Then we like serviced apartments. if you look at all the real estate themes, whether residential, commercial, industrial, serviced apartments deliver the highest yield. So that's why we like serviced apartments, and even then, not serviced apartments anywhere. If you look at all the key nodes within the city, Westlands is the best place to do serviced apartments. So that's why we do serviced apartments in Westlands. And then the final theme is mixed-use development. Rather than just doing residential, commercial, or industrial, you mix it together. When I say mixed use, to bring it alive, think of Yaya. You have Yaya apartments, you have shopping, then you have offices upstairs. So you are able to withstand shocks when there are shocks, because you are not relying on just one theme. For example, those who are just relying on offices during COVID, they were really hit. Now, if you had offices, apartments, residential, and
some commercial,
you are going to withstand shock. So that's what we do in real estate.
And you have many products then out of this.
Yeah, we have.
Because there are things that, just keep confusing people. There's Cytonn high yield, Cytonn low yield, Cytonn many things.
Okay. On the real estate side, we have around 9 developments. Now, I talked about how we source this money. We source this money both from public and private. Public, that means I can put it on TV, for example. Private, that means I have to come to you and have a discussion.
Okay.
So under the public side, the main products is called Cytonn Money Market Fund and Cytonn High Yield Fund. To use the word fund, it has to be a regulated product. Then under the private side, we have 2 main products, the Cytonn High Yield Solutions, not fund, solutions, and the Cytonn Project Notes. So we have the part that raises the money, both from the public and from private contracts. You take this money, majority of it goes into real estate development.
And in all this, what you're promising the person who's giving you the money is a return.
Yes, primarily a return.
And there's a fixed tenure for the return or fixed interest, or is it you bring the money, nyumba ikiuza ni sawa, isipouza sasa si unajua?
It depends on the product, because when you enter the investment side, you can enter a pension fund. That means you're going to put money over a long period of time, and the return will be whatever it is after that period of time. You can enter the money market fund, where the return varies, not in a large way, but in a small way on a day-to-day basis. Or you can enter this private product, Cytonn Project Notes and Cytonn High Yield Solution, where there's a return that is promised, but that promise also is predicated upon certain conditions.
Okay. So now looking at that, and if you want to then burst out into the rest of the Kenyan scene, before we go into what we're hoping then will be prescriptive and then solutions towards what we see as economic troubles today, how would you describe the lay of the land in Kenya today?
In terms of the broader economy, or just within the capital markets section?
The capital market section, of course, then touches on the broader economy in one way or another. So if you could do a little bit of both.
Okay. So let me start with what I know best, then I brought it into economy. Now, when you talk about the lay of the land, everybody in any country wants a good life. We all want to send our kids to school. We all want to pay our bills. We all want to have good houses. Now, if you look around the world, the countries that tend to have the best standards of life, the very lives we aspire to, tend to be Western countries. If you look at those Western countries, there are 2 things that are common about them: free people and free markets. Free people loosely defined as democracy, free markets being able to trade with each other as we so wish. Kenyans are willing to die to get to places like US and UK. Now, if you come back to Kenya, yes, we've gotten, I would think, free people. You can say whatever you want. It's not like
you really cannot, but within certain limits.
with compared to our neighbors. Nobody will lock you up for whatever you say. It's not like the Nyayo days. I remember growing up, and my dad would have to whisper things about Nyayo. These days, you can write whatever you want on the internet. You can actually go to court and be able to get judgments against a sitting president, as we've seen things like BBI couldn't pass. Now, where we have a real issue is free markets, particularly on the capital markets. In these countries that we want to go to, if you want to raise money, chances are 40% you'll get it from a bank, 60% you'll go to capital markets. They are competing markets. There's banking markets and there's capital markets. Come back to Kenya. Banking markets is 99%. Capital markets is 1%.
Could you do a quick run through of what capital markets are exactly so that we have an understanding from the get-go?
Good. Now, if I want money, I can either go to the bank or I can go to another market. This other market is what we call capital markets. If you go to a bank, you will take a loan. But if you go to a capital market, you will sell your shares. So I go to Ndu and say, Ndu, I have this great company called Cytonn Investments. I need to grow. Can I sell you a share? And you give me money. So that is done in the capital market. And even selling that share, you can put it on a billboard. That means CMA needs to have approved it. So you're going to the public markets. Or I can come to you directly. That means it's private markets. It's none of the business of CMA. That is between you and I, and we enter into a private contract. So when we say capital markets, we mean you go raise equity, either privately or publicly, or you go raise debt, again, either publicly or privately. EABL, for example, when they issue bonds, they're issuing bonds in the capital markets. That's a public offering. When I come to you and say, give me money I put into real estate, I'm also raising debt from you privately. So that is...
And both are capital markets?
Both are capital markets.
Okay.
Private and public. And if I were to give you a little bit of... when people say private, they wonder, okay, where is this money going? I always try to show people, if you want to see the power of private capital markets, walk to a petrol station in Kenya or around Nairobi, a Shell. You will see Shell, but what you don't know is that behind Shell is a private equity firm called Helios. Unfortunately, it's a foreign private equity firm, not local. Around Shell, then you will see, let's say, a Java, right? Java, again, owned by a foreign private equity firm, not a local firm. You will see a Good Life Pharmacy. Again, private equity, not local, foreign. Yet, if we could be able to develop our own private capital markets locally, instead of a Shell, you should have a National Oil Corporation. I think that's the name of our local. Instead of a Java, you should have a Kenchik. Instead of a Good Life Pharmacy, it used to be called Mimosa, the local. I don't know if you remember. It was bought by Good Life. So we go fuel at Shell, eat at Java, buy medicine at Good Life, and this auto shop called Auto Express, again owned by a private equity firm. All this money has to be repatriated abroad because of our local private capital markets are not working. So just circling back to your question, there's the banking markets and there's the capital markets. Within the capital markets, there's a private side and there's a public side.
And so our capital market is basically not doing what it ought to be doing in terms of being as vibrant as it ought to be vibrant. Is it because of lack of understanding or is it because of too much regulation? I usually, or lack of regulation?
I usually call it, you've said not doing what's supposed to do. I usually say it's moribund. It's as good as dead. Because if it's only producing 1% of the capital that a Kenyan business is looking for, yet it should produce 60%. Again, I always like to refer back to Wall Street because that's what I'm familiar with. I was privileged to work there earlier in my career. If you go to the US, Wall Street drives the financing of businesses. If you have a great idea, you go to Wall Street, they'll evaluate your idea. It doesn't matter whether your father is known, where you come from. They look at your idea on its own merit and say, this is a good idea, let's fund it. Here, if you have an idea, chances are 99%, and that's data from World Bank. You'll have to go to a bank. The first thing they'll ask you is, where is your collateral? Now, I'm somebody with a great idea. I want to develop an Apple. I want to develop a Google, a Yahoo, the kind of things that we enjoy every day. You can't develop it here because you need collateral.
Who are investment bankers?
Who are investment bankers?
Yes. What are they? What do they do?
What
do they look like?
I happen to have been one earlier in my career.
Yes.
What an investment banker does,
yes,
do here, very well paid at Standard Group.
Amen.
At the end of the month.
another amen.
At the end of the month, she gets her money. She pays her expenses and is left with some money. She wants to get a return on it. She can take it to the bank, and in most cases, you'll get nothing for it. You can go buy, let's say, a money market fund, or you can say, I want to take more risk. I want to buy a bond, or I want to buy equity, shares in a company. But Ndu does not know how to go to a company and say, sell me your shares.
Right.
On the other side, you have a company that is looking for money. Let's say it's a Cytonn. Let's say CT Muga owns Cytonn.
Amen.
So CT will say, I want money because I have this great idea, but I don't have cash. You know, I'm not part of, to use the word being used loosely. I don't come from dynasty, so I have to raise money from somewhere. Between the person who's looking for money and the person who has a little bit of savings, there is a gap. That's where the investment banker comes in. You take his business, you package it into shares and bonds, and then you come to her and say, buy these shares. Now, of course, in between, he's not just an investment banker. There's an accountant, there's a lawyer, there's a regulator, there's all these kinds of service providers. So an investment banker, if I were to put it loosely, is a professional who brings savings and ideas together to create great products that we enjoy every day.
And would houses and the development around houses be also considered to be a product?
Absolutely.
So you're still an investment banker?
Yes, I'm still an investment banker in real estate.
Okay.
Okay.
Where do investment bankers keep their money?
CT, I'm not sure I would have a general answer, but I would say just like any, because remember, you're an investment banker as a professional, the same way you're a journalist as a professional. But when I get back home, I'm a family man, I'm an individual, so I will look at my budget and say, some I will put in the bank. Now, the money that I need to pay bills within 1 month belongs to the bank. That means if I want it, I will get it back. What I might need for an emergency, I put in a money market fund. That means when I don't need it, it's earning me around 10%, but when I need it, I can liquidate it fairly quickly.
Yeah. Let me tell you why I asked the question. I'm listening to you, and what you're saying makes a great deal of sense. How many people understand this? Because people who have even a little bit of money and would like to benefit from their money would very much like to talk to an investment banker. Because an investment banker would have the knowledge and the wherewithal to actually indicate what it is that money that they have could do for them in the so-called money market or development market or whichever market it is that they're interested in. But you call it maribond. Yani kabisa I mocheri na yeye side by side. Kabisa, okay? Perhaps we need to consider how it is that life can be breathed into this. Because something that is clear and something whose purpose is also clear should be understood by many. And I'm saying it is not. So if it is dead or in the process of being dead, or funds are being raised so that the body can be carried and be buried home, then it is because those who are in that industry seem to have a closed shop and not many other people outside those who are in it know about it. Because anything that sounds this good, anything that sounds this promising, anything that seems to meet the dreams that most Kenyans have of wanting to own something for yourself, to be part of something, to make your life better, who would refuse?
So what's the missing link?
I think it's our culture, ladies and gentlemen, because if today you went to these countries that we aspire to go to, your intellect is just as good as them. What differentiates us is our culture. What is missing is we somehow do not have the people, the governance, the drive to open up our capital markets. And that's why these banking markets that are dominant, Kenya is one of the best places to run a bank. 22% return, one of the highest in the world because of this bank dominance. Credit is hard to access, and when you access it, it's very expensive. Why is it that these people who are running the banking sector don't want the capital markets to expand? That's what we need to examine, because essentially our financial markets are still in the KANU era. It's a one-party system. Instead of having banking markets and capital markets, we just have banking markets.
Right.
But if you look deeply, there's a connection. Think about, I don't want to get to individuals, but think about who was because capital markets, the person at the center of developing is the Capital Markets Authority. There's a person who should be expanding these capital markets, explaining it to Kenyans and financing these businesses, financing agriculture, financing housing. But if you look at the last 10 years, who was the chair of the Capital Markets Authority? It was a banker. So how can you take a competing industry and have it supervise the other industry?
By their competitor.
By their competitor. It's like getting the chairman of Azimio to oversee counting of votes for Kenya Kwanza.
To oversee the appointment of cabinet secretaries.
Exactly.
Of Ruto secretary.
When we saw the ringing of the bell a couple of weeks ago, the president was very clear about some of the things that he wanted to see done. So there's hopes that there will be a cleaning up of the capital markets. There's hopes that we will see more companies coming on, and then more Kenyans then being able to buy shares in these companies, essentially own them. And he said very clearly, that it needs to be cleaned up, number one. He says it needs to be transparent, it needs to be opened up. Do you agree with that? And if so, how then do you think this ought to be done?
I absolutely agree with that, because we can't keep borrowing to finance our local enterprises. We borrowing from outside. We need to borrow from our own individuals. These businesses, for them to grow, they need to access capital from the capital markets. So everything the president said makes a lot of sense. I only have one issue. Why hasn't it happened? It makes a lot of sense. So why is it that over the last 10 years, nothing happened in the capital markets? So the only tweak I would make is, before then, we go to the NSE and say, let's bring companies to the market, let us have people save, is to try and analyze the issue and ask, but this is so sensible, why hasn't it happened? It's because there are so many obstacles within our capital markets regulations that need to be, we have to take out these systemic obstacles for this to happen almost by itself. If you take out the obstacles, it will happen by itself. Everybody wants to make money, whether it is somebody who wants to save or it's a business that wants this money to grow its business. So I think the capital markets initiative needs to, first and foremost, and I can almost guarantee, Eric, if you guys call me here in another 5 years, if they do not address the obstacles to capital formation, all these will be talk. To invest in agriculture, we can't make rain, but we have to do irrigation. That's massive capital investment. Housing will need capital. No single bank can finance the kind of capital that is required.
If you look at 200,000 houses.
200,000 houses a year. In 5 years, that's going to be 1,000 houses. Even if the house costs 1 million, I mean, you are going to be talking of trillions of shillings. No bank can do that. You need capital market, and not just local, both local and foreign capital markets. So what I think ought to be the number one issue is, what are the obstacles in the system? How can we remove them? Then now we come and say, now let's relaunch the NSE. The focus ought to be Embankment Plaza, where the Capital Markets Authority sits.
We'll talk about it as we continue. Is it about the individuals, or is it about the laws and regulations that have been introduced? And what is it that is the systemic failure? Edwin Dande, the CEO of Cytonn Investments, is here with us in the studio. He says, yes, for Ruto's grand plans for the capital markets to work, he's got to start with a big broom. Open up the cupboards, sweep. and then start afresh.
This is the Situation Room, the only way to start your day.
This is the Situation Room on SpiceFM, on KTN Home, on YouTube and Facebook. Edwin Dande, the CEO of Cytonn Investments, is here with us. We're talking about the capital markets. Edwin, of course, you know about the Kenya Mortgage Refinance Company, the structure of it and why it was established, so it can help people get easily to own homes. So they're giving out the home loans from the participating 9 banks and 11 SACCOs. You go there, you ask for KMRC loan below 10%, fixed for the entire duration of 25 years. What do you think of that? Is it a game changer in this market?
Yeah, it's definitely a game changer. That's an example of capital markets initiative that is working, because essentially instead of the bank lending you money for your mortgage, then holding it on their books, they can then sell it to KMRC. They get money and they lend it again. So it increases the speed, or what in finance we call the velocity of money moving around. So it's a great initiative. It ought to be supported. And I like the idea that they are focusing on what they call affordable, around 5 million kind of area. They are not financing somebody who wants to buy a house for 100 million. So it's a great initiative. I think the only one thing that ought to be explained to the public is the sustainability, because if you're going to lend to me at below 10%, then it needs to be clear in the long term where is the money coming from, because the last time I checked, even the government has to pay 12% to borrow. So if the government, who is considered the most riskless borrower in Kenya, has to pay 12%, so where is KMRC going to get this money sustainably to be able to lend to people at, I think the rate they use is 7%. So where are you getting the money to lend at 7%? That's the only thing that's not clear to me. But the initiative itself, tested, tried in the developing world, is a great initiative. I think that's one of the key wins of the, remember KMRC is under CBK.
Yeah.
One of the key wins of the current CBK regime. Yeah.
So back to the capital markets. If we look back into the Kibaki years, there was a lot of activity in the capital markets. In fact, it's like everybody was just talking about shares and NSE. All of a sudden, there was the Safaricom IPO, the Kenyan IPO, the Muya Sugar IPO. I mean, there were IPOs happening in the market. There was expansion of activity at the NSE. What happened? Why did it all slow down?
I would ascribe it to two things. First, during the Kibaki era, I think everybody knows the Kibaki era did very well, not just in terms of capital markets, but in the economy generally. It was a good time for the economy. He let the economy work. He put professionals in charge and let the economy work. Now, unfortunately, from that 10 years, investors incurred quite a bit of losses, whether it is Kenyan shares going down, so people got shy. But also, after the Kibaki years, look at what happened in the Capital Markets Authority. There was quite a bit of vested interest. As I said, initially you had a banker coming to chair the Capital Markets Authority. You cannot have focus on expanding capital markets if you have a conflict of interest. As I said, I will not name names, but there are people who've done very well over the last 10 years. They've acquired companies, they've grown their capital markets business, while everyone else has not done well. So I think the key issue over the last 10 years has been conflicts of interest, what other people also call state capture. Do you have the right people overseeing the capital markets? And then you look at the people they appointed. Again, I will not name names, but you cannot have management. And when you really start peeling, who is this seated making decisions in the capital markets, you find somebody has never issued any share, what you are calling investment banker, never issued any share, never issued any, and issuing is essentially selling. That's the term we use in finance. Never sold any stock, never sold any bond, never managed any fund, never did any merger and acquisition. Then they come to the market and now they're telling capital markets players what to do. So I think not only governance, but also there is a question of competence. Do you have the right people? And it's a question I'm asking. Let Kenyans decide for themselves. Do you have the right people in the right seats in the Capital Markets Authority who can then drive this initiative that the president wants driven? I don't think so, but I could be wrong.
Essentially putting the fox to oversee the hen house. Huh?
That's what I think.
No, you're not wrong in your thinking. You're not wrong in your thinking at all. But if we're to take our thought process along those lines, this figure that's supposed to be a magic figure of 5 million, how did they arrive at it? And why do they think that that is an attainable figure when it comes to the cost of housing for most people? I would have thought 1 million is something that perhaps is feasible. 5 million is a lot of money. It doesn't matter how you look at it. And it's outside the reach of very many people. Now, the number crunchers may have crunched those numbers up. But the real question in my mind is, yes, we want to build 200,000 houses. The discussion in my mind shouldn't be about the numbers, but the technology that we are going to use in ensuring that these houses meet the high standards of habitation that are necessary for human beings, but also which are cost effective. Now, that discussion I have not heard. But I'm sure someone's going to talk about Ukraine when I mention the cost of housing.
You're asking a very fundamental question. So what is affordable housing?
Precisely.
Depends on who you ask.
Yes.
But like with most things in the world, there is an authority. If you go to UN Habitat website, they say an affordable house is a house that can be paid for by the median income earner in that country.
And how do they determine this median income earner?
You then go to KNBS.
And they tell you
the median income earner is 50,000.
Yes.
At least according to their statistics.
That's what they say.
Then you say, fine, what is the maximum that this person can spend in a house? If you get 50,000, you pay taxes. Again, the same UN Habitat says no more than 30% of your income. So you just take your income, you take 30% of it. So this person should be able to spend maximum around 20,000. So then you say, okay, if all I can put into housing, whether rent or mortgage, is 20,000 per month, even if I get my mortgage at 12%, we did the calculation. The maximum house that a median income earner in Kenya can actually afford is around 2 million shillings. Beyond 2 million, they cannot afford it. So if you go strictly by what is an affordable house in Kenya, it's around 1.8 million. Within the Nairobi metro, is about 1.8 million. Then on the other side, now you go to the developer. Then you say, what is the cheapest house you can produce for me? We did the math. It came to around 2.8. So
that's the cheapest. What size of a house?
That's around 50 square meter.
Essentially, it's a series of cupboards. If you live in it, you sleep standing.
50 square meter is what? It's not a studio.
It's like a two-bedroom. A studio is like 30 square meter. Yeah. So you see, you are looking at somebody who at least will have a bedroom, a family. So you say the cheapest. Cheapest
two-bedroom house with a living room, as a kitchen, and 2 bedrooms and bathroom is going to be
around 2.8 million. If you get, and that's not here. I mean, let's be honest. You have to go outskirts.
You have to get outside of the center of Nairobi.
Yeah.
Okay. Continue.
So if you go to, and it will be good, and it's good you've started this discussion, invite other developers and ask them, what is the cheapest house you can produce? So it is 2.8 million. The maximum the median income earner can afford is 1.8. So there's an affordability gap between 2.8 and 1.8. So that is why you will not see a clear definition of what's an affordable house, because the reality is that for the median income earner in Kenya, according to UN Habitat, the houses are unaffordable.
And that median that we arrive at, it's an aggregate, is it not?
Yeah.
Now, it's false, because it gives you the impression that a very large number of people in this country earn 50,000 or thereabouts, and that is not true. The vast majority, according to the same Kenya National Bureau of Statistics, are living on something like 200 shillings a day. Yes. So how are you going to buy a house if you earn 6,000 shillings a month? And are you saying that this person does not want or would not wish to buy a house? Even the figures that you have, it makes perfect sense if we were to look at the narrative that we have been talking about here with regards to paying rent while actually buying a house. So that 15 to 20,000 is going directly into ownership and you're living in the house, it makes sense. But if it's money that's put aside and yet you're still paying rent and you're meeting other needs, that maths will not add up.
So, but then Edwin, picking up on what CT is saying, and then looking at what we've talked about the role that capital markets can play. In my understanding of this, as basic as it may be, what we are saying then is that the role they ought to play, what was the number that you gave, 1% in terms of what it should actually do?
They are contributing 1%. They want to contribute somewhere between 50 to 60% of capital.
They ought to.
Yeah.
They ought to to contribute about 50 to 60%. They are not doing that. That essentially, from what I hear you saying, is that then there would be what we want to call float in the market if they were contributing at the point at which they should be.
Options and competition.
Exactly, would abound, isn't it?
Yeah.
And that's not happening, obviously. So then it limits the options that are available to then be able to deal with some of these things that we're talking about. Disposable income that will allow you to buy a house. Disposable income that will allow you to save, send your children to the schools that you want to do. Because then we're looking at the economy as a whole, isn't it? You talked about obstacles that are stopping this from happening. And essentially those need to be swept out in order for us to attain this 50 to 60%. What are those?
Three main things I would say and do. Number one is the governance. Mm-hmm. If somebody wants to be a governor of CBK, we know the process. They'll be nominated, they'll go to parliament, they'll be asked questions. You saw the way cabinet secretaries were being asked questions, and a regular Kenyan can say, yeah, I think that person is competent, I think that person is not competent. Even if it's a sham process, so to speak, it's been subject to public participation, scrutiny. That's and parliamentary scrutiny. How is the chairman of CMA appointed? I don't know. It just seems like somebody just appoints. Let's be candid. I mean, I'm very practical. You cannot speak, and I know I'm contradicting myself, you can't kind of speak ill of a sitting president, your space can be squeezed. But now that Uhuru is no longer the president, I can say it. He just appointed his buddy, right? And co-shareholder in a bank. And that became the chairman of CMA. So you first have to fix the governance. Once somebody then becomes chairman of the board, how is management appointed? How did we end up with these managers who have zero experience in capital markets? So you have to fix the management. Then after that, now you have to go into the regulations. One of the small regulations that exists that's very stifling to capital markets, there's a role called a trustee. A trustee is essentially a prefect. If you go to the pension fund, you have professional corporate trustees playing in the pension fund. Pension fund has grown to around 1.5 trillion. This banking market is 4.5. This capital market is 0.1 trillion. Now, the prefect in the capital market, they've inserted a rule there saying the prefect must be a bank. Now, banks are supposed to compete with capital markets. Why do you just say that the prefect here has to be a bank, yet there's an industry of professional prefects called trustees
that you can choose from?
That you can choose from. So it's those kinds of things. Then you come to like real estate. To raise money in capital markets, the real estate investment trust. They say if you want to invest in a development real estate investment trust, you need a minimum of 5 million shillings. Now, in fact, when you said 5 million, I thought you were referring to that minimum for real estate investment trust. So today, if, Eric, you wanted to be an investor in the development real estate investment trust, the minimum you have to have is 5 million shillings. In a country where the average income earner, if KNBS is right, is 50,000.
So what does that mean? That a minimum I have to have is 5 million.
If
to
you
do what?
To invest.
To
invest so that you can get a return.
To put money in the rates,
yes,
I have to have 5 million.
Yes.
What's the minimum in the other sectors?
Okay, let me first give you a context. In the US, the minimum is around 100,000 Kenya shillings to put money in a development REIT. they are much richer than us. Here, you have to have 5 million. So what the message I'm saying is that this is an exclusion mechanism. I'm just trying to show the issues that need to be fixed. You have to take out the monopoly of banks. In fact, they shouldn't be overseeing the capital markets at all. They should be in competition and giving Kenyans options. So you take out this thing that a trustee or the prefect has to be a bank, reduce these minimums to reasonable. I mean, I'm a CEO, I'm running a company, but if you come today and told me, here's a good product, the minimum is 5 million, I can't invest, right? Because first, I don't have the 5 million. Even if I had it, do I want to put it all in one product? That's why the only REIT that is working today, there's only one in the market. So to answer your question, fix the governance, bring it under parliamentary scrutiny so that we can ask these people questions and the public can see. Once you fix the governance, have some minimum respectable standards for qualifications to be a manager or a CEO or a director in the capital markets. Then now, once you have a board that has undergone public scrutiny, a management that is competent, they will then look at the rules and say, these things are obstacles, let's remove it. Something as simple as disclosure. We have engaged the market severally and said, can everybody disclose what is in their portfolio so that the investing public can know when I'm investing? And it's a requirement in the West. If I have a money market fund in the West, every quarter I have to list here all the things that I've bought. Here there's no disclosure. Why isn't there disclosure? So once you fix the governance, management, then they will go and fix this regulation. Then the market will open, and then we can finance housing, and then we can finance agriculture.
So it will be possible for the government. See, let me just read an excerpt of what the president said yesterday with regards to this housing. He says that the government needs to evolve from being a mere enabler to becoming a sponsor of projects. Not only will we provide land and bulk infrastructure, but I'll personally take charge of the process to unlock the challenges that inhibit investment. For instance, VAT exemption on inputs has been enacted to lower the cost of construction. Implementation has been curtailed by delays in approving applications for VAT and other things. So he's saying we've got to make sure that it's easier for the private sector to invest in real estate, so then we can bring the cost of housing down. First of all, remove the cost of land. If you can do that, do you think that would be a game changer? If, for example, the government said, piece of land here, we are inviting for applicants from the private sector to take up a project, come and show us how it's going to benefit the people, and then you're given the land, how much lower would this 2.8 million shillings go to?
Now, if you want to resolve the housing issue, you have to resolve it using high density, essentially tall structures. If you're going to do a high density development, if you do the calculation, land only contributes 10% of the cost. The other construction cost, professional fee, cost of credit will constitute the other 90%, marketing costs. So land will help because it will make the house cheaper by 10%. However, there is no silver bullet. You have to solve all things. You have to solve land, you have to solve construction costs, cost of borrowing, finance the person who is buying, and government cannot do this alone. As I said, as the cheapest livable house that people are producing is 2.8. But let's say miraculously you can bring it down to 1 million. And the president has said we are going to do 200 to 250,000 a year. So over the next 5 years, that's 1 million. If you take 1 million times 1 million, that's 1 trillion shillings. Almost our budget for the entire year, for the entire country. So government cannot do it alone. Nobody has 1 trillion shillings. So you have to bring government solutions, local, private capital, international capital. I mean, it's a massive operation. I think the last time we did it, I did the math. If you're going to produce 250,000 houses a year, that's 700 a day. I mean, can you imagine churning out 700 units a day? So he is right, but that's just part of the solution. You really need a massive private sector focus to achieve this government. And the private sector is capable. Just take out the obstacle to capital formation in our markets, and you will see what private sector can do. If you talk about land, ourselves, we are just one developer. We are sitting on over 1,000 acres of land from JV partners who have land, but they don't have the capital or know-how.
Explain JV, please. I know it's joint venture. But
joint
explain it,
venture.
please.
That means I have and thanks a lot, City. That means I have a piece of land, but I don't have the money or the knowledge to develop it. I go join with a developer, and the developer then will do the development and raise the capital. So it will contribute to solve that 10%. But if you ask some developers, land is not my key issue. I have so many JV partners. In fact, these days we tell JV partners we don't want any more land. So we have many joint venture partners. What really is the key issue in real estate is financing for the developer and financing for the end buyer. It comes down to capital markets. And that's why I keep going to it, that if we want to solve our housing issue, and I'm willing to bet my career on it, if we don't solve capital markets, we will be back here the same way we are back after the last 5 years. I know we say, we didn't do affordable housing because of reggae and BBI. That's not the reality. The reality is it was not keenly fleshed out end to end.
End to end on what is required. Edwin, thank you very much for joining us. Yes, we'll invite you, not after 5 years, but as all these things keep unfolding, we'll keep inviting you for these conversations and insights of what's happening in the market.
Thanks for your time. I also challenge you, invite the Capital Markets Authority so that you get the other side of the story and let them explain.
It's important. Edwin Dande is the CEO of Cytonn Investment. We've been talking about what the capital markets need so that they can become as vibrant as they ought to be. Keep it here for more conversations.